Okay, so it's the 2017 tabular statement. Um, marker. First job as always is to lay out the balance sheet as it's given to you. So we go assets first, so land and buildings. And then we've accumulated depreciation, land and buildings. And this is sort of the slow enough part of this question. We just throw those numbers in. Remember, accumulated depreciation is a minus. Same with vehicles. I've got 50,000, and then we have accumulated depreciation of 27,000 or minus 27,000. Equipment 15,000 and accumulated depreciation of 3,000. Okay, we've got stock, current assets 73,000, and then this is our first working. We've got debtors less provision of 86,000. So we've got debtors and we write it down like we would in question 1, BDP. Now, the less provision of 4% is included in this 86,400. So the debtors is 86,400. Divide that by 96. Multiply by 100. Now, if you weren't sure how to do it, just have a guess that it's going to be 90,000, the next main number up. But there's no reason why you wouldn't know how to do it. So it's 90,000, and then the BDP, 4% of that is 3,600 as a minus. Okay, and that gives you your 86.4. Okay, let's just skip a couple of lines. I'd say that many should be enough, and then just add them up to get your total. Okay, your liabilities then. You're looking from creditors down. So we've creditors of 54,000. We've bank of 32,000. VAT of 8,400. And expenses due of 6,000. Okay, authorized share capital doesn't go in, but issue does. $560. Share premium is 30,000, and profit and loss is 109. Okay, so just add those up again, skip a few lines, skip 3 just to be safe. That gives you 799,400. Okay, so from there you don't need this page anymore, so you're down to your workings page. Now each of these is its own sort of separate little question that gets its own column. Some of them actually have to get 2 columns just to be sure. So the first one is the January working. So we give the heading of, I'm going to make this a little bit bigger if I can. So you can see this hopefully. So we've got January. So it says, January, Delaney decided to revalue land and buildings to 800,000. The land element is 110,000. That land element is only going to be important when you're coming down to depreciate in December. So you can ignore the land for the time being, maybe just highlight it and then highlight the depreciation down here. Just be aware of that. So land and buildings has to get up to 800,000. So how do we get it to 800,000? Well, 630 plus another 170 gets you up to 800,000. Now we know when we revalue that depreciation goes to 0, so that has to be 25,000 there. So minus 25 plus 25 gets you to 0, and that gives you a total of 195,000. So the revaluation reserve, we know when we revalue it's 110,000 is 195,000 euros. Okay, so we have a total of 195,000 and 195,000, and of course the assets will always equal the liabilities. Where can I just see if I can just no. All right. All right, that's January done. Second one then. Delaney bought February, so we'll give it a heading of February. It says Delaney bought an adjoining business on the first of the second. Again, that's going to be important for your depreciation, which includes buildings of 180,000, equipment 50, debtors 12, and creditors 20. So each of those go up by those numbers. So buildings goes up by 180,000, equipment goes up by 50, debtors by 12, and creditors by 20. So the value of the business is 180 plus 50 is 230 plus 12 242 minus the 20 is 222,000. So that's its value. What we paid for it is 200,000 issued shares at a share premium of 20%. So 20% of that is 40,000. So that's 220, 240 is what we paid. It was worth 222. That means there's a goodwill of 18,000. So the goodwill is an asset. So you know this from sole trader service firms, incompletes in particular. When you pay for a business more than it's worth, it's goodwill. So 18,000 goes there, and if we've done it correctly, 260 there, and 260 there. So that's February. March. Management decided that the provision for bad debts should be increased to 6% of debtors at the end of March. So the provision for bad debts is 6% of debtors. Debtors is 102,000. I have to do a little sort of a working here. So it's not really working, but 6% of 102,000 is 6120. So we have to get this bad debt provision of 3,600 up to 6120. So we have to add on or take away in effect another 2520. So minus 36 minus 2520 will give you 31 or 6120. An increase in a bad debt provision, as you know, goes in expenses, so it reduces your profit. So 2520 will go into your profit and loss. That's that one done. Again, all of these questions are things you see generally in question ones, or you'll see them in other questions, incomplete records, service firms, or whatever, but they're not anything new. Okay. Purchase goods on credit for 14,760. So we know when we buy goods on credit that creditors go up. So for this one, that's 14,760. Creditors is going up by. Okay. We have bought goods. So stock will go up, but stock doesn't, you can't include the VAT amount in stock. So we take the 14,760. We're going to divide that by 120. 3 and multiply by 100. So stock is going up by 12,000. What's going to happen to VAT? Well, VAT, if we buy goods, we're we're debiting purchases and debiting VAT. So VAT as a liability is going down by the difference, so minus 2760. That'll bring you to 12,000 for both. Okay, so in the T accounts, it's in reality it's debit purchases and debit VAT and credit creditors. Um, the reason profit and loss isn't changing is that purchases is going up, but stock is also going up. So purchases goes up by 12,000, stock goes up by 12,000. In your cost of sales, purchases goes up by 12, stock goes up by 12. They're taken away from each other, so it's a zero effect. So your profit doesn't change until you sell on the goods. But the reason it's minus 2760, that's a debit of VAT. Okay, so that's April. Now, um, June. Now this one can be tricky. So just read it carefully. Received the bank statement showing a credit transfer of 7.2. So first of all, what's happened to your bank? The credit transfer, that's money into us. So it's minus 7.2. Okay, so your bank overdraft goes down by 7.2. That's the first part. To cover 8 months rent received in advance. So rent receivable prepaid is a liability. So down here you'll have rent receivable prepaid, and that's going to be a liability, and that's going up by 7,200. Okay, you owe that 7,200 back. We'll deal with that in December at the end. For the fact that it's 8 months, again, we'll come back to when we do December. So this one always ties in with December. And then it says a direct debit of 4,800 to cover security costs for the year 30th of the 4th. So security costs are an expense. And it's to cover security costs to the 30th of 4th, 2016. So just be aware, right, that we are doing the accounts for 2016. So if we paid, we'll just deal with the security costs first. We're paying the security costs for bank overdrafts going back up. So that is 4,800. So if we're doing the accounts for 2016 and we're paying where is it again? We're paying 4,800 to cover security costs for the year ended 30th of 4th, 2016. Well, that must have been due. Okay, so that would be expenses due, or oh, we already have expenses due. Okay, so in our expenses due, well, our expenses due, they're no longer due once we've paid them, so they have to go down. So the expenses due goes down by 4,800. So now, hopefully, this balances off as zero. I'd suggest you with this one, this June one, there's been a feature, there's two different ways that they've asked that in the years. This is the more modern way where there's an expense due. So just be aware of that. Just be aware of that at the end. Okay. So that's no longer due. Anyway, that's June done. We'll be coming back to it when we get to December. July. So paid by check a creditor account balance 1,800 and received a discount of 100. So we paid by check 1,800. So bank goes down by 1,800 and we received when we paid by check 1,800, we got a discount of 100. So that means that creditors went down by 1,900. So we paid 1,800, we got let off 1,900. So that's a discount received, which we know is a profit or a gain. So it adds to a profit of 100. And again, that should balance off at 0. Sorry, our bank overdraft went up by 0. I just reread that, sorry. Paid by check, creditor account balance of 1,800. Creditors goes down by 1,800. The bank would have been 1,700. So I read that as you paid the check was 1,800, but you didn't. You've created, you paid it by check at creditor account balance. So the balance was 1,800. You were given a discount of 100, so you only had to pay 1,700. So again, I would have made that mistake in my leaving cert just from rushing it a little bit. August then. So sorry. A payment of 900 was received from Barry. So our bank overdraft goes down by 900. That's the first thing. Okay, just take this bit by bit. His debt had been previously written off. This represents 60% of the original debt. So again, this we've seen this working loads of times. That's a bad debt recovered. So the full amount of the debt is a gain. So divide that 900, divide it by 60, and multiply by 100. That brings up 1,500. And then debtors have to go up by the difference, which is 600. So that's the first part. This represents 6% of the original debt, and Barry is undertaken to pay the remainder of the debt. On the same day, goods to the value of 369 were sold. Okay, so this includes 23% VAT and a markup of cost of 20%. So 369, we sold goods to the debtor at 369. So we have to add in another 369 to that. So he owes us another 369. Remember that debtors and creditors always include the VAT. All right, that purchases and sales and stock don't. So the stock then, well, what happens to stock? Stock goes down, and it goes down by the cost of the stock and the amount without the VAT. So the 369, we're going to find the amount without the VAT. We're going to find the cost price first. 1 divide by 120 and multiply by 100. And then take that 307.5 and divide it by 123 and multiply by 100. Don't do that because you've got it 307.5. And that gets it to 250. So we take off the 23, or we take off the markup, and then we take off the VAT as well. And then and stock then is going down by 250. So just do that again to show you. So we're selling stock. So stock is always valued at cost. So the stock goes down at cost. So it's 369. We're going to take off the profit. So we're going to divide that by 100 and well, you can do it either way. Divide by 123, multiply by 100. That gets it to 300, and then we'll take that 300 and we'll divide it by 120 and multiply by 100, and you get 250. You can do it either way. Okay, so stock goes down by 250. All right, VAT 23%. So sorry, the VAT is, well, I have to find the VAT. So the VAT is, take the 369, going to divide that by 123 and multiply it by 23. That'll give you 69 as your VAT. So find the VAT base. The VAT's going to be our balancing figure, pretty much. And then you've made a profit of an extra 50. So the profit is, well, just the profit is going to be the balancing figure. So you got 369 euros for something worth 319, I think. Let me just balance this out. That balance is 719. This balance is 669. So there has to be a profit of another 50. So we're going to add 50 to that. That's 1550, and it balances 719. So really what you have to do is treat that as two separate workings. So if I'll just show you the second part of it here, and then I'll delete it. So the debtors, for the second part of the transaction, debtors goes up by 369. He owes us that money. Of that 369, 69 is VAT. So if we take that 369, divide it by 123 and multiply by 23, that gives you 69. So of the 369 he owes us, we owe 69 euros to the VAT man. So when we sell goods, we owe the 69 euros, or we owe the VAT to the tax man. So that's the 69 there. Our stock has to go down by the cost price. So the cost price is 369 divided by 123 multiplied by 100, and then take your answer of 300 and divide that by 120 and multiply by 100, and that gets you 250. So your stock goes down by 250. So that will balance then at 119. So 119 minus 69 gives you a profit of 50. Okay. And that's how we do it. So that's the combination of the two of them together. All right, I'll just leave that there for a bit and I'll delete it at the end. So that's the August combined. That's what you should have in your answer. Okay. September. So we received 50,000 from the issue of the remaining shares. So in September, our bank overdraft goes down by 50,000. All right, and the issue of the remaining shares, well, we check the question. We are authorized to sell 800,000 shares. We have sold 560 and 200, so 760. So we have to get that up to 800,000. So the remaining shares is 40,000. So we got 50,000 euros for 40,000 shares. That's what the definition of a share premium is. So we got 10,000 euros more for the shares than they were worth that par. So that is 0 and 0 for your balance. So October then. Goods sold for 738 by Delaney were returned. So we know that stock is going to be impacted, right? This includes VAT at 23%. Again, we know VAT's going to be included. Delaney issued a credit note for 700 due to a delay in returning these goods. So we sell goods, and we know we sell goods to debtors. So debtors is the credit note is for 700 euros. So debtors goes down by 700 euros. So we have to know what stock goes back up by. All right, so stock, again, the same as this working over here, the August one. We take off the markup and we take off the VAT. So stock is 738 divided by 123 multiplied by 100. That's 600. And then 600 divided by 120 multiplied by 100. So stock goes back up by 500. The amount of VAT we owe goes down. So we take the VAT inclusive figure, divide by 123 and multiply by 23. And that'll give you the VAT. And the amount of VAT we owe now goes down because we've returned goods. So VAT goes down by 138. So this then balances at 200 euros. So this is minus 138. When we return goods, sales returns reduces profit. So the difference is 62. So the sales returns reduce the profit. It hasn't reduced it by the full amount of the credit note because first of all there's VAT included, and second of all there's been a restocking charge included in that. So that balances then at 200 euros. Okay, so hopefully that's not too difficult. November. A creditor who was owed 4,000 accepted equipment. So straight away now, you know this from your question one, the creditors goes down by 4,000. Doesn't matter what he accepts, it goes down by 4,000. The book value of which was 3,200. So that means we've received a discount of 800. So that's a discount received of 800. So our profit and loss is going up by 800 euros. Okay, so this is going to be minus 32 here. Now, what's happened to our equipment? Our equipment has gone down by its cost of minus 5,400, and then its depreciation has to have been 2,200. And to get rid of the depreciation, you add it back on, because if you remember, depreciation is a minus to start off with. So when you dispose of depreciation, it's a debit or debit of credit. So here you're adding it back on. So minus 5,4 plus the 2,2 gives you 3,200. And then you've got minus 3,200 at the top as well. All right, the December working, I'm going to do it in two parts because we have to go back to this June one if you remember, okay, which can be tricky enough. So first one is the depreciation. All right, so the building's depreciation charge for the year is 2% of book value. So the depreciation is calculated from the date of valuation and the date of purchase. So this is January and February. So he revalues his land and buildings. So I have to do working here. So I'll come down to the working actually. So the depreciation of buildings. He revalues the land and buildings to 800,000 on the first. So it's going to be 2% of 800,000. But there's land included. So you take out the land. And that's for a full year. So 2% is 690. Gives you 13,800. Then he's bought the new business, so he's got 2% in February, and he bought that on the 1st February. He bought land and buildings costing 180,000. So we assume it's well, it is building. So 2% of 180,000, and he only has those for 11 months. And that's 3,300. So in total, that's 17,100 for his depreciation. So we can go and put that depreciation now into our 1st December working. Obviously, depreciation reduces profit, so minus 17,100, and depreciation is a minus 17,100 up here as well. So that's the first part. Then tells us depreciation on vehicles is 8,000 for the year. So again, another minus 8,000 here. And a minus 8,000 up here. So that's that. And that's our December one done. So then we're left with the June. All right. And this is going to tie in with where's June? With these ones here. So uh, if you remember, it says we received a bank statement showing a credit transfer of 7,000 to cover 8 months' rent from the 1st of June, rent in advance. So the person is paying us from the 1st of June. So he's paying us for June, July, August, September, October, November, December. That's 7 months, and then 1 month into next year, which is January. So 1/8 of the rent receivable is prepaid at the end of the year. So this 7,200 at the end of the year. Just remember that 7,200 is going to disappear now. So at the end of the year, that rent received prepaid is 1/8 of that, which is 900 euros, is prepaid. So 6,300 of it has to get transferred into our profit and loss. So we've gotten 6,300 as a minus there, so it'll be 6,300 as a plus here. Okay, and that gets you to 0. The second part, the expenses due. So, where is it? And a direct debit of 4,800 to cover the security costs for the year ended 30th of the 4th. So 4,800 was our expenses due. So that is, this one always gets a little confusing for me, sorry. It's 30th of the 4th. So that's for a year, 4,800. And it's for 30th of the 4th. So it's for the first 4 months of the year. So at the end of the year, assuming you're keeping your expenses paid, well, your total, there's going to have to be another, what would that be? 8 months. So 8/12 of the 4,800 is due at the end of the year. So in my total for expenses due, I think 4,800 and 8/12 of it is due, which is 3,200. Which is telling me is wrong. All right, just bear with me. For the year end 30/4, so 4 months, 8. Right, I'm going to Okay, I'm just going to put in the answer that's in the American scheme here and come back to it. I'll explain it again. So I wonder. Hmm. Right, in the American scheme, it's 2,800. I'll just have to check why that is, right? So your profit would go down by, so this to get to 2,800, it's 6,000 minus 4,800 is 1,200, and then sorry, okay, so yeah, I have it here. Sorry. So if we've got 6,000 and we've got 4,800, well, at the end of the year in December, 4/12 of that 4,800 are still have to be taken away because they're not due, or have to be basically added on. So in December, we take that 4,800 and we find 4/12 of it, and that's 1,600. So 4/12 of it are going to be due in December at the very end of the year because on the last date, this 4,800 brings us up to December, and uh, on a year by year basis, we have to pay 4 months more. So in December, 4,000 or 4/12 of the 4,800 is due. So then it becomes 6,000 minus 4,800 plus 1,600 will give you a due of 2,800. Okay, so of that 1,600 or 6,300, we have to take away another 1,600, and that'll balance it off then at 4,700. Okay, so once I take out this August, I'm going to just remove this here. Okay, the whole thing will balance out now. So the last job is to just total all the way over to the first of the first. Okay, and you'll see that it balances like that. I'll come up with clearer, better explanation for that June one at some stage. All right. So that is now I've got 2017. I've got the question one done. I have the service firm done, and I have the tabular statement. So I'll try and get the marginal costing and the budgeting question done today at some stage. Okay. So we'll see you again.